Somebody probably told you that the property that does, property that offer high rental or strong rental return also does offer a strong capital appreciation. This is like very common sentence in real estate world, especially you hear it from the agent. But the reality, it's almost always never true. So if the property does one job, it's not does another one well. Or it can be does partially, but sometimes it could be badly. So today I'm going to explain to you why and how it should be and what type of property you should looking to buy. So technically, one of the building that does, offer a higher rental return, they price the building how it should be priced based on the rental return. If the building does offer strong capital appreciation, the price they price is the way that it should be for the capital appreciation, meaning that the buyer doesn't care about how low is the rental return right now. What they are looking to is hold it and then so that they can make a capital appreciation in 5 or 10 years. So this is why capital appreciation and rental return is completely opposite direction. It's never be the same. It is completely different type of property. It is completely different type of goal. And especially if you are first time investor or you start everything from scratch, meaning that you have a little bit of saving and you will use your salary to pay for buying the property, this is a very important time that you need to start think about. Technically, for us, we ask a lot of questions to investor, and the goal is just to understand where they are at financially, so that we can help them to achieve their goal in the next 3 or 5 years. So between the capital appreciation and rental return, the property could be a completely different location, different style, different type. So today I will basically focus on the first time investor. So this is basically a rental return. Why I say that? Because if you start with a goal with the capital appreciation, then there are a lot of disappointment by the time like when you realize like, oh my god, why I do this. It could be 3 or 5 years later, then you will realize that you start with the wrong direction. So if you start from scratch, you start with very small saving, and you want to build your portfolio in the next 3 or 5 years, we strongly suggest to look into property that have a good rental return, meaning that the property has to have a monthly income so that you can have that rental income saving up to buy the next property. So I will explain to you step by step slowly and where you can start right now. And sometimes actually it doesn't even matter if you have a lot of saving or you have small saving. It's more about information that you can get from the person or the agent that you talk to, meaning that nowadays in Cambodia especially, there are a lot of opportunity, like because of there are many projects starting at the same time. The developer compete each other and they offer very good payment plan, meaning that some off-plan project they offer installment for 2.5 to 3 years without interest rate. And if you pick the area that, if you're looking for a rental return, usually the price of the building is not that high from my experience, meaning that if the project that you pick particularly that okay, I am looking for something that generate me rental return, then those off-plan projects usually they offer like a small down payment and they offer installment during the construction, meaning that if the building doing 3 year construction, developer will offer you installment for 3 year, and you can pay based on the construction, or you can pay yearly, or you can pay monthly with very small percentage. So those kind of situation, and this is actually very important, especially like first time investor. It will help you a lot to start building your portfolio. So you start with that, and then probably 18 months through the installment, meaning that the building that you purchase, the first one, is almost handover. So that can be a time you can start looking for a second building, second projects, meaning that when the first building is complete, you can put it on rent, and that rental return will help you to pay the installment for the second project. And the trick between this first and the second project, like the previous video that I talked, is that you have to pick the building in a totally, completely different location, different district. And also you have to pick something that target different type of tenant. So if the first one you target single person, the second one you target a family, and it has to be in different district. Why I say that? Because this is in a way where you can protect your portfolio, because if the first location that you pick doesn't do well or having some problem, you cannot rent it out. Then if you pick both at the same location, it will be affect or hurt your portfolio. So that's why I always suggest pick two different location, and also target two different tenants as well. So that's it. I mean, so pick it wisely between the first, the second, and then if you do well on the first and the second, meaning that after the second building start complete, you already have two income from the rental income. So at that point, you don't really use your salary to do the installment anymore. You still can do it, meaning that you can pick something that you want it to be different from the first and second one. If the first and second one you focus on the rental, then the third one maybe you can looking into something that do a capital appreciation. So it's stress free as well, because the first and second will have rental income and will help you to pick something that you wanted to buy for the third, which is capital appreciation. And that property it silently will build your wealth, but it just probably take time, like 3 or 5 years, and you can collect a big return during that time. So choose wisely and ask a lot of questions, especially not the predict data, the actual comparison. If you can just go to the area or you search into the area. If your goal for the rental return, just click on that area, like, okay, what is the rental return around that district? Because yeah, rental return is very important for the first time investor. So thank you for watching my video. We do write this article on our website. If you want to read in detail yourself, I will put the link of the article on the comment on my video, and feel free to ask me any question. I am more than happy to give you the answer. And thank you for watching my video, and see you in the next.